Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is May 20th, and we're looking at Brent crude oil trading a little bit up this morning, not significantly so with all the headlines, but Brent is above $84 a barrel, 84.33, up about a third of a percentage point, and more or less trading sideways, you'd say, for the last week or so, and 2 weeks perhaps, after we came off that $90 peak in April, which sort of been trading pretty flat through the month of May, kind of locked in and around $83, $84 on Brent. Let's go to this morning, as always, Monday morning. Welcome Omar Najia, Global Head of Derivatives at BB Energy. Omar, your thoughts on this sort of tightly sort of confined oil price in around 83, 84 and Brent, looking maybe for some movement. Your thoughts on what might give it direction?
Basically, Brent, WTI, they already finished their correction lower. And WTI and Brent this morning are breaking out of a down channel, which means that people who are short this market, lots of funds, lots of basically, not banks, but let's say people who want the price down, including lots of American money, are about to be taken to the cleaners. So if we right this market, then I think you're going to see a substantial rise this week. So if you look at your charts, graphs, and you draw a line from the 12th of April high on Brent or WTI and connect that with 26th of April high, you'll see a down channel, and we're breaking out of that down channel. So I think you're about to see people on the short side, and people are very short this market. I think you're about to see them panic. If you look at the Iran thing, I think the Iran thing is a non-event. So I'm sure people will come and say, they're focusing on geopolitics. Iran is never going to say if this was sabotage, because if they say it's sabotage, then they're already locked in to a major war, which is basically stupid. So they're 100% not going to say anything. So this is going to basically blow over. I think, as I've been saying for a long, long time, you're going to see the war in Lebanon happen, but you're not going to see something directly between Israel and Iran, at least not for now. Until quote unquote needed. But I think the oil markets are breaking higher. I think the risk assets, including Bitcoin, are breaking higher. The S&P, we've been looking for it to correct. It's not being able to correct. So, and inflation is ticking higher, and people are still expecting markets to move lower. And they still say, what about China? What about demand? What about that? So let's see, but we are extremely bullish this market. So we think that from here, over time, it's not going to happen tomorrow, but over time, from here, we're going to go and see new all-time highs basically over the months and years to come. So we're extremely bullish.
Omar Al-Ubaidli, Director of Research, Bahrain Center for Strategic International and Energy. Omar, the news overnight, obviously, the president of Iran has died in a helicopter crash, as has the foreign minister and many other very senior officials. And similarly, at same time, not similarly by any means, same time, there is news out of Saudi Arabia that the Crown Prince is postponing travel plans because the king has taken a bad turn there. Your thoughts on obviously the news out of Iran, what is inevitably at some point going to be the news out of Saudi? Obviously, everybody gets old and ends moving on. So your thoughts, these two events coming together, do they have any impact for the region, or is this going to be a smooth rollover in both cases?
We should remember that Ali Khamenei is also not in great health either, and he's someone, there's been a lot of speculation about his successor as supreme leader of Iran. I think that in the case of Saudi Arabia, it's something very transient, and I think that the Crown Prince has been has held the reins for a significant amount of time now. So the fact that he's undergoing some health procedure is neither here nor there. If and when the day comes when the Crown Prince becomes the king, there may be a bit of a bit of how should I say, speculation at that point, but I imagine that the transfer will be pretty smooth and nothing. Now, Iran, I think with the president and the foreign minister's death, building on what Omar said, is a little bit trickier here because there's immediately going to be a lot of speculation about, this being an assassination or something of that sort. And as Omar said, Iran's in a difficult position because if it is, it doesn't want to, what it wants to disclose is not necessarily in line with what the truth is. So in answer to your question, I think the Saudi issues, no, just business as usual. Iran, no, it's not business as usual. I think that there's going to be a lot of question marks, and the messaging that we see from different Middle Eastern actors over the next week or two is going to require some good statecraft, because there's going to be a lot of people, a lot of non-state actors who are armed to the teeth, who are waiting for an excuse to, go hell for leather. And it's going to take very carefully scripted speeches from, important people to de-escalate, if indeed de-escalation is what's on the agenda, which we hope it is.
Gulmira Razayeva, founder and managing director at Eurasia Analytics, a former energy advisor in Azerbaijan and from Azerbaijan. Gulmira, maybe starting your comments there, given that the Iranian president was up near the Azerbaijan border in that corner of Iran. Obviously, the long-standing tense relations between Azerbaijan and Iran. Your thoughts on this news?
Well, as you know, this happened, on the border, but on the way of the Iranian president, rises back from Azerbaijan, the liberated city Zangilan to Iran. So they hold the event of opening ceremony of the hydropower, which is the first hydropower in the region, liberated area, which is bordered with Iran. So President Aliyev insisted on the presence of the Iranian president and foreign minister, so they actually came to that event, and on their way back, so this unfortunate event happened. Well, in terms of the regional geopolitics, we already heard that, I agree that this will go smoothly, but it seems that political relations between two countries, Azerbaijan and Iran, was, going kind of in better diplomatic way, because the conflict is now in the past. Everything has sort of found finalized resolution, and Armenia with Azerbaijan, they're now in negotiation to finally conclude peace agreement, and also to have negotiations on the limitation of the borders, which is going on quite successful at the moment. Maybe because there is no intermediary between the two countries, that they are now, successfully moving forward in the negotiations on peace agreement and border delimitation. So when the intermediaries like the US, Russia, Europe, mainly in France. So, it's been always some obstacles to that, but now it seems that two countries managed to talk, without any help. So, in terms of oil exports from Iran, I mean, the energy, oil and mainly oil exports from Iran, I think it's already been affected a little bit. Most of oil from Iran goes to China, and it's already been decreased in previous months as well. It was actually a crude shipments to China was the maximum of the last 12 months is 1 million barrels per day, but it points to drop in June after running the success. So I think this will weaken crucial economic lifeline of Iran in the following months and maybe next year as well. The reason of this, not only the U.S. Efforts to enforce sanctions on Iranian oil export, but also I think has more to do with changes in China's regulatory and oil market environment. Also, related to refineries margins, which has dropped a lot, China is importing less now, including from Iran. So this is already happening, and I think it's obviously nothing to do with the events that happened.
Omar, just looking forward as you highlighted in your earlier comment, bullish outlook for the direction of oil prices. Is that also bullish outlook for the direction of increased oil demand, consumption, or is it based on the liquidity, in financial liquidity, looking for investment vehicles to go into, or is your bullishness based on the expectation of economic growth and more demand for crude oil?
Both. So basically, people always get confused. They look at demand and supply, and they start counting like plus 100,000 and minus, which is a bit ridiculous, because if you could do that, then congratulations. It's all estimates and guesstimates and maybes and if and all this kind of stuff, right? So nobody sits there and says, demand is up by 100,000.2 million barrels per day. So you got to look at basically.
Well, OPEC does do that, and OPEC are meeting in 10 days. They're going to be looking at that point.
Yeah, but OPEC does it, the EIA does it, the banks do it, and they all got different numbers, right? They're all looking at the same thing, and they all got different numbers. So it's not very useful. I mean, I could look at it and give you different numbers as well. So, and the most important bit is you have to look at this market, take a step back and take a look at the overview. The overview is oil demand is going up. It's not going down, it's going up. Why? Because oil demand, energy demand, consistently, year after year, decade after decade, goes only one way, which is higher, right? So you can add all the stuff that you want about green and whatever it is. Energy demand is going to do one thing, which is increase and increase exponentially. And as we move towards internet, AI, whatever you want to call it, it's only going to increase even more as more people come into cities even more. So the idea, frankly, that basically demand is dropping this year and it's a bit low and whatever it is, that's kind of, you're like looking at at a leaf and not taking a look, not just at the tree, but at the forest, right? So you have to take like a kind of overall view. And you don't just look at the oil markets, you look at what the dollar's doing, you look at geopolitics, you look at what equity markets are doing, you look at what inflation is doing. And every single one of those, to me, is bullish. Is it possible that the S&P goes up, the dollar drops, geopolitics go crazy, and oil goes to 50? Yes, everything's possible. Is it probable? Definitely not. So you've got to kind of focus on wider stuff, not what OPEC is saying, what this is saying. The geopolitical environment today is sufficient on its own for me, not to be short oil. That on its own. The inflation environment on its own is sufficient for me not to be short oil, right? I mean, oil is still, I bought some sparkling water from Voss for the house on Amazon. It's more expensive than crude. So it's up to you guys. You want to sell? We're happy to buy.
Omar, that's Omar Ubaidli. The geopolitical stress in this market, or the absence thereof, the oil market remains largely range bound, a little bit numb to the developments on the geopolitical front. One of which, of course, we had a reminder overnight, which is the Red Sea, where a Chinese vessel, carrying crude products, I'm not sure which, but ultimately carrying petroleum, was hit by the Houthi ongoing sort of insurgency there. Your thoughts on this these different geopolitical stress points in the region that were somewhat elevated in the first quarter, drove oil prices up to $90. But ever since we've had the sort of Iran-Israel face-off, it seems that geopolitical stress has come out of the region. Is that your reading, or is that a kind of a false dawn? Your thoughts on the collection of geopolitical stresses in the neighborhood and their impact for energy markets?
If we start, first of all, with the Houthi threat, I think we have to acknowledge that part of it is a degrading of their military capabilities. I mean, they've been under attack by the US and UK and various forces for some time. And although there are question marks as to how sincere or how well thought out these attacks are, at the end of the day, there seems to be a clear statement from the US that we're not going to accept sort of indiscriminate piracy and politically motivated or otherwise. So it's not as easy to keep pulling off these attacks as it was maybe, say, 6 months ago. And I would add to that after the Iran and Israel brought each other to the brink, I think the critical response was Israel's response to Iran's missiles, which was very muted by Israeli standards. Israel's doctrine is very much, if you hit me, one punch, I'll hit you back with 10 to establish deterrent. And this was a completely inconsistent, a response that is completely inconsistent with their usual doctrine. And I think that was a very credible signal, given the electoral pressure on Netanyahu and his desire to sort of maintain this image as a strongman. This is a very clear indication to markets, to all stakeholders, that Israel does not want a major war with Iran. Now, I agree with Omar that southern Lebanon is a different issue. There we might find something a lot more sticky going on. But even then, the indications are that it might be localized. So I think that, going back to your original question, I think that we're going through a calm, albeit maybe a calm before a storm, whereby the deep geopolitical tension has decreased somewhat, primarily because there have been credible indications, credible, costly signals by both Iran and Israel that they don't want to, go hell for leather with each other. But in the background, we always have the Lebanese conflict and, the possibility that someone presses the wrong button, something lands in the wrong place, and then really anything can happen.
Gulmira, we're also seeing the Ukrainians continue with their sort of low-tech attacks on Russian energy infrastructure, drones hitting refineries, which did play a role in elevating that first quarter price as Russian exports and Russian production of refineries was damaged to some extent for a period of time quite significantly. Your thoughts on the Ukrainians' tactics continuing there and how they may impact the markets as we move into the second half of the year?
Well, yeah, there was some increase in price of Russian byproducts, but Russia had ban on export of diesel, EN 590 and some jet fuel and some other by export of these products. But just a few days ago, I think last week, it lifted this ban, so Russia started again exporting these byproducts. But yeah, we can see the changes in the price, and we can see that offers are now coming less from Russia. But I think the main markets that are buying Russian byproducts, that's China, it's mainly traded in Middle East, like Fujairah and other ports. I think they still continue doing so. But if these attacks, drone attacks, will be continuing in the future as well, so we can see perhaps a serious scarcity of Russian export of byproducts, because just a few months ago, it affected some around 500,000 barrel a day of byproducts, and I think that this can be increased in the following months if these attacks are continuing. So this will definitely affect the price, but also can be some deficit of Russian products in the major ports.
Let's go to the survey question this morning, which is sort of tackling this theme that we're discussing, which is ultimately the markets being a little bit agnostic, increasingly numb to geopolitical developments, and the large amount of spare OPEC production is likely contributing to this. Agree or disagree with this statement? The oil market has become increasingly numb to geopolitical developments and the large amount of spare production capacity. Omar, looking at the second half of that sort of statement there, obviously OPEC plus meeting, as we mentioned in our earlier comment, in a matter of days now, next week. And Your thoughts on that as an event, as a market actor? Does it resonate for you? What is your expectations? What could impact the markets in whatever decision they make or don't make?
So OPEC want higher prices because the West has told them that they are surplus to requirements, whether it's Saudi or whether it's the UAE or whether it's Iran or whoever it is. Everybody understands that the West has an agenda, and the agenda is whatever it's called now, carbon zero, whether it was 2030 or then they delay it to 2045, whatever. The bottom line is still the same. Basically, that oil is not good, oil is dirty, and oil must be phased out, right? So they are rational people, intelligent people, so they will basically maximize the cost of oil. They will keep the cuts, they will increase the cuts, they will do whatever it is basically to do that. Also, the world is changing. I don't believe basically that it's to do with surplus and all this kind of stuff. If you look at the SPR in the States, it's totally empty. The US is exerting massive pressure to keep oil prices in check. Why? Because there is basically an election coming up. And if you look at it statistically, any president going into an election, any incumbent president going into the election that sees gasoline prices tick up, loses. So again, I like to take like a bit of an overview, look at like the big picture as opposed to, the minutiae of this, this is, what's happening today and tomorrow and this week and all this kind of stuff. So oil prices in general going up. How do we know? Because the world is changing. The US hegemony is on its knees. Look at Israel. It's been fighting in Gaza for 6 months plus, and it's done absolutely nothing. Look at basically Iran hit Israel. Iran hit Israel from Iran, right, with missiles, and sent a message, which the Israelis got loud and clear, and the Americans got loud and clear. The Houthis have stopped all deliveries into from the Red Sea into Israel. Stopped it completely. The Americans and the British sent, and they're going to do. They did absolutely nothing. The world is going through massive change. Look at basically what's happening on TikTok. Look at what's happening in US colleges. When the world goes through massive change, you can do one of two things. You can say, yes, everything is okay, and I'm just going to sell because it's all going to be good. Or you can say, I'm going to panic. I'm going to buy everything that's not bolted to the floor. So I like to panic first, and then I'm going to wait for everybody else to come screaming after me, right? So things are not normal. Things are not normal at all.
Omar El-Beidly, amongst the things that are not normal is the export of crude oil from Kurdistan to Turkey, now over a year suspended. 450,000 barrels per day. I mean, not an insignificant amount of oil still not going through the pipeline to Turkey. Your thoughts on what is underpinning this problem, why it cannot restart, and where are the fractures there that need to be looked at and resolved?
I should point out also that, this also ties into the Israeli boycott of trade with, Turkish boycott of trade with Israel, because this pipeline, this transition of oil from Kurdistan to Israel via Turkey was actually an important part of the trading relationship linking these three countries, and it's possible that with the suspension of that, with the offline nature of that oil, that may have contributed to Erdogan's willingness to suspend trade relations with the two. I think that you have a deeper problem, which is Kurdistan's relationship with the Iraqi government, which has been frayed for a long period of time now. And this you had the what's it called, referendum. Independence referendum, I think it was maybe 3 years ago now. It was during COVID. Already tempers or the relations were bad before then, and that definitely made things worse. And we haven't really seen a proper reconciliation. If Iraq, central government, and Kurdistan were to be on good terms, then I'm sure that united front will be able to resolve all sorts of other problems relating to that pipeline. But really, until those two are able to reconcile, and the internal political difficulties of Kurdistan continue, then you're just going to have these kind of disruptions, and really the biggest sufferers here are the Kurdistani population. They're caught between a rock and a hard place.
Another point I wanted to get your thoughts on, Omar, before we wrap up, was this week is moving into the last episode of the Indian elections.
Yeah.
With all indications that Narendra Modi will be re-elected, and his party will lead the new government, etc. No change there. The scale of his majority might be under debate. But my question to you is, the Indians seem still very determined to reinitiate or continue the momentum of the India, Middle East, Europe trading corridor that was announced at the G20 last year, that obviously includes and goes through Israel. Your thoughts on India getting positive reception on that through the region, looking forward as he takes up his third term in office?
I think, first of all, India's credibility internationally when it comes to partnerships and so on is quite low when it comes to economic and infrastructure investments and so on, because for two reasons. One, the most important, is that the history of these kind of things is pretty weak. They may talk the talk, but they're a very inward-looking country, and they're very limited in terms of their external partnerships and economic arrangements, and that's very much at odds with someone that's trying to establish an infrastructure, a massive transport corridor. Secondly, even if the political will were to be summoned and there was some sort of sea change in India's propensity or desire to establish long-term economic commitments outside its borders, you have the additional problem of the sclerotic nature of the civil service and courts, and so even getting something done, which is now you mentioned Modi's popularity. One reason for Modi's popularity is he's trying to address this perennially slow nature of Indian bureaucracy. But until that happens, and we're still some way from it happening, I think that India really, if you look at all its economic partnerships, they don't pack the sort of punch that China does, that even Europe and the US does, because they just don't really have the history. It's not part of their foreign policy doctrine, and there's just too many bureaucratic hurdles to launch it. Now, with another Modi term, maybe towards the end of it, if he continues his internal reforms, there could be a bit more credibility. But even setting that aside, I think that the question marks there are even bigger question marks about the US's role in this, and about how Israel can be integrated into a regional corridor, even if we were to get past the issue of India's commitment. Because really, given the way the Middle East is at the moment, it's difficult to imagine Jordan and Israel and Turkey and all of that being part of a harmonious and a high credibility transport link.
Well, we'll certainly have to see where that goes. Gulmira, I wanted to give you the last word and get your insights. Of course, you spent much of your career looking at gas moving out of the Caspian and Central Asia into Europe and so forth. And we have this big development, this rather strange ongoing, Russia's ongoing war in Ukraine, and still Russia gas continues to transit Ukraine to its European buyers, by and large, due to a EU brokered gas transit agreement from 2019, which sees still 40 billion cubic meters of Russian gas still transits Ukraine to Europe. But that expires this December. I wanted to get your thoughts and insights, Gulmira, on the expiry of that agreement. Do you expect it to be renewed? If it wasn't renewed, where would that 40 billion of cubic meters of gas come from? Just generally your thoughts on the outlook as we go into the second half of the year and this renewal becomes front and center.
Yeah, as things stand now, I think it will not be most likely be renewed, but it's 40 million cubic meters per day. So going through Ukraine to Europe, and those countries have already started to looking for some alternatives. Well, first of all, I mean, there might be different models of this gas, import from Russia. So those companies, European companies, mainly in Central European countries or, in East or South of European region, they simply can just, start importing gas directly on the border so that Russian Gazprom will not be involved on the Ukrainian territory or on European territory anyhow, and the role of Gazprom will be diminished. So, or if they don't want to deal with Russia at all, then they obviously need to have some alternatives. Some very interesting developments also happened in Caspian region as well, because the Turkish energy minister he announced that finally they reached an agreement with Turkmenistan to import some gas from Turkmenistan to Turkey via Azerbaijan, which is, I think, very important development, because these talks between Turkey and Turkmenistan, Europe and Turkmenistan, Azerbaijan and Turkmenistan has been ongoing since early 90s. So having this historic, if the agreement is signed, that's going to be a really historic event. But there are some questions also arise. I mean, via which infrastructure this gas will be transported to Turkey, because the existing one, the Southern Gas Corridor, is currently operating, on over capacity, and it needs to, if via this infrastructure, then it needs to be expanded. In that case, then who is going to finance this initiative? It's going to be someone who would fund this. So it's definitely not Europe. Maybe Turkey, maybe someone else, or maybe there will be, dedicated standalone pipeline. We will see what will happen there.
Right. Well, we're going to have to wrap it up there. Brent crude oil trading up 0.5% this morning at 84.40, as pointed out by Omar Najia, that it's breaking out of the range upwards. Let's see if that momentum continues during the week. Omar Najia, Global Head of Derivatives of BB Energy, as always, thank you so much for your Monday morning. Omar El Abaidli in Bahrain, thank you as always. And Gulmaya Razayeva, thank you very much for your insights this morning, founder and managing director of Eurasia Analytics. Take care and have a great week, everybody. All the best.
Thank you.